Hello there, welcome to this edition of Global Business Africa from the Kenyan capital, Nairobi, where it's 9 p.m. It's 2 in the morning in Beijing, China, 2 in the afternoon in Washington, D.C. We've got you covered with all your business content between Cairo and Johannesburg and Nairobi and Lagos. It's going to be a good ride. Here's what's coming up. Egypt is looking to African markets to restore its economic growth. We'll have the details live from Cairo. The cost of borrowing remains unchanged in East Africa's biggest economy as Kenya's central bank holds its lending rate. And South African scientists are leading the way in developing cheap but powerful supercomputers. Now then, let's start this edition of the program, as we have on several other days, with a look at Egypt. It's no secret that its economy has been in decline ever since 2011. And so far, the story of its economic revival has focused mainly on the aid that it gets from the Gulf states, Saudi Arabia, the UAE and Kuwait. Now, however, with a new president in charge, it's looking to the rest of Africa to actually boost its growth moving forward. Yasser Kim starts our bulletin tonight by looking at the trade ties and how they've evolved between Egypt and the rest of Africa.
This business forum in Cairo discussing trade relations with Africa is an example of many attempts by economists and experts to highlight the importance of returning to the African fold economically.
There is a combination between the private sector and the Egyptian government. There can be no true growth in Egypt unless we focus on Africa and try as much as we possibly can to help out, seek the opportunities, and face the challenges that this continent is facing. One continent, one future.
During the Nasser era, Egypt had great political and economic influence in the continent. However, former presidents Anwar Sadat and Hosni Mubarak turned to the west rather than their neighbors. Trade reached a meager $100 million in the 1990s. After the ouster of Mubarak in 2011, the new leadership felt it was essential to reopen African ties. Trade with COMESA states doubled, and investments reached $3.7 billion, mainly in railway and infrastructure projects. Experts say there could be more.
If you go to Equatorial Guinea or Nigeria or Mali or any African countries, you will find that the constructions companies doing great efforts and good projects in these places. And I think this might be one of the important fields where Egypt can improve its relationship with the African countries.
Poor roads and underdeveloped transport systems are hindering progress. Experts say Egypt has great potential to serve Africa in these fields, but the government needs to act quickly.
The most important challenge that face Egypt is the willingness, the eagerness of the Egyptian political leaders and Egyptian government to give a real and serious support to all efforts to invest in Africa.
Egypt is trying to rebuild its shattered economy, and the government is planning to emphasize on trade with Africa. Currently, it stands at only 4.2% of total Egyptian trade output. The government is planning to target 10% in 2 years. Yasser Hakim for CCTV, Cairo.
Yasser Kim, of course, has been keeping a very close eye on developments in Egypt's economy. He's live with us in Cairo right now. Yasser, let's look at the prices of petrol, diesel and natural gas. So the cuts in subsidies, they've soared by double digits. But to what extent has that dented the competitiveness of export firms that operate in Egypt?
Not so much. First of all, before the prices were announced, the Prime Minister had a large number of meetings with the business community, with owners of firms, and he managed to get a promise from them that they will not raise prices, that already the energy price had been subsidized at a high cost, and they do a lot of profit. They get a lot of profit because of these subsidies. And even now, after the raising the prices, there's still a substantial amount being subsidized by the government. So he told them that you can cut a bit from your profits for the sake of the country. And he had a lot of positive reaction. Second of all, the Egyptian pound has been devaluated in the last year, during the last year, and now it's on a competitive price because it's much lower vis-a-vis the dollar and the sterling pounds and the euro, and therefore still the prices of the Egyptian products outside are competitive, and even could be more if we see an inflationary situation where the pound will even get much more weaker. If this happens, then for exports nothing will be affected, but even more exports can be expected.
Indeed. We'll get back to the inflation argument a little later, but first a look at FDI. Flows from Hercules partners into Egypt peaked in 2010, roughly about $70 or so billion dollars or so cumulatively. But how have FDI flows behaved since then? What's needed to get them growing again, especially from African countries?
It's catching up, but a bit slowly. And at the moment, what's needed is a government action, and the government is already working on that. We've seen the Prime Minister, Egyptian Prime Minister, he had a tour to several African states where he signed a number of projects to help export Egyptian products into African countries, and also to attract investments and products in the Egyptian market. But as well, the problem with Egypt is that not just that the government moved towards the West in the last 30 years rather than Africa, but even businessmen are concentrating more on selling their products to Europe, to the United States, and experts are telling them you're leaving the important market of Africa to other countries in Asia or to the US. And now there's a plan by the government to help businessmen, give them facilities so they can open markets in Africa rather than to go to Europe or the United States, where maybe prices are better to sell and easier, especially with the infrastructure and the roads and everything. Mm-hmm. So there is a host of the different multiple movements on more than one side to try to regain the status.
Indeed. Finally, Yasser, Fitch has raised concerns about inflation rising to double digits from just over about 8%, 8.2% actually, in May. But given the fact that Egypt's government has essentially cut subsidies by quite a bit, what's the outlook for inflation levels for the rest of the year?
Obviously, it will go up because of the prices, but the contradictions is between the government figures, expectations, and the private and the experts. The government says that it will control it at probably 1% more, not more than that, whilst the experts are saying if the government cannot control, then it could reach 13 to 15%. We're talking 8% in May, 10 last month. But what's more important is that the government tools to stop inflation is by supplying the market with a lot of products at low prices, lower than market value, so that it can balance the price if private investors, private sector increases the prices. So the government would dump in products in the market, and it already started so, through state-owned supermarkets and chains, and to balance the prices, as well as crack down, as they say, on any trader or any shop that raises the prices above the normal levels. And they're saying, the government is saying it can't control that, but this is a test. We're going to wait and see if it will succeed.
Indeed, we'll have to leave it there for the time being. Thank you very much for that. That's CCTV's Yasser Kim there live in Cairo. Now then, China has committed itself to expanding ties with South Sudan, especially with regard to trade, agriculture, infrastructure and energy. That pledge was made during a meeting between the Chinese Premier Li Keqiang and the visiting Vice President of South Sudan, James Wani Iga, in Beijing. Wani assured Chinese investors operating in South Sudan that the government there has put in place measures to ensure their safety while they are in Africa's youngest country, which turned 3 this particular day, by the way. Africa's youngest nation is marking its 3rd anniversary today, but it has been torn apart by civil conflict since mid-December.
Number one, security. Because, my friend, without security, nothing else can happen. So this is first and foremost. Number two, in terms of business. For any business to flourish in any part of the world, after you have secured tranquility and stability, the next you move to is have proper laws. Laws which are attractive.
Number one, on one of the points that they committed themselves to is committing themselves to support us in terms of strengthening and keeping our leadership, the legitimate leadership of His Excellency the Vice President, because they have known from what we have shared with them that we need peace, we need tranquility, and also we need the legitimate government to be in place so that when you have a stable country, you can continue to work better.
Let's focus on another oil producer. Libya's oil sector is slowly recovering, with yet another oil field now reopened, in effect raising the prospect of the country more or less doubling its current oil output. This comes just about a week after blockades ended at major ports. The 340,000 barrels per day El Sharara oil field resumed operations after protesters ended a 4-month strike there. It is in Libya's remote southwestern end, and connecting pipelines have been blocked several times by protesters making financial and political demands of the government in Tripoli. Last week, Eastern rebels surrendered the Ras Lanuf and Essida oil ports to the government, ending an almost year-long occupation. Both terminals accounted for about 500,000 barrels per day of oil output. That said, experts say it will take quite a bit of time to get production back up to speed, as fields and pipelines will require quite a bit of corrective maintenance after remaining idle for so long. Now then, a quick run through the markets here for you as we take a short break into the next part of Global Business Africa. The All-Share Index in Nigeria ending the day higher. Pretty much the same thing in Egypt, and in the NSE 20-share index in the Kenyan capital, Nairobi. When we come back, we'll be looking at the cost of borrowing. It's relatively unchanged in Kenya. The central bank has kept the base lending rate on hold. And South African scientists are leading the way in developing cheap supercomputing firepower. All that and more is coming your way next. Africa is on the move. It's home to 7 of the world's 10 fastest growing economies.
From small businesses to large-scale enterprises, hear directly from entrepreneurs behind the story. It's about putting you in the picture so you know where Africa fits in the global context.
Global Business, weekdays at this time on CCTV Africa.
Zambia is a hidden gem, soon to make its shining debut on the global tourist circuit. It successfully hosted the UN World Tourism General Assembly in 2013 and is expecting the exposure to shoot their previously slow-growing tourist earning numbers far beyond the 2010 mark of $148 million.
Welcome back to the program. You're watching Global Business Africa from the Kenyan capital, Nairobi. Let's start in South Africa at this point of the program. Scientists and researchers at the University of Witwatersrand are pioneering a new generation of supercomputers made from generic off-the-shelf components. Now, the team at the High Energy Physics Group involved in a massive affordable computing project, better known as MAC, is developing and building supercomputers with so-called high throughput capability. The idea here is to deal with a huge amount of data that scientists produce. Angelo Coppola has the details on what's hot tonight.
The team is using affordable and energy-efficient existing technologies and components which are used in smartphones and tablets. The project has attracted the attention of universities in South Africa and China and the European Organization for Nuclear Research.
We are trying to develop the hardware and design the hardware that is generic, that can be used by our science and SKA and other big sciences and big industry in order to process large amounts of data in a very small amount of time.
The quantities of data expected to be generated by a project like the Square Kilometre Array and the speed at which data must be processed at research institutions like CERN continues to increase.
The Massive Affordable Computing Project is something called HTC, which is high throughput computing, which is where you don't want to work on a problem for a very long time. you just want to stream through the data as fast as possible, like for the SKA or Atlas at CERN, for example. You're getting gigabytes or terabytes of data per second, and you just want to deal with it and pass it on to the next step of the process.
Current available technology also needs a lot of expensive electricity to operate, which increases the cost of equipment and big data processing. Processing data to solve one problem with high-performance supercomputers also normally takes quite a long time.
As far as we know, we're one of the first groups to actually try and build a high-throughput supercomputer with ARMS, which is the Advanced RISC machine. It's a type of CPU. And essentially this CPU is it's a very low-powered CPU, and it's designed from the ground up to be power efficient.
So the ARM basically right now is believed to be the most optimal device to solve the problem of the processing of the data. Even though an individual chip is less performant, it's much more efficient in terms of electricity consumption.
Although acquiring enough conventional supercomputer or high-performance computers with enough processing power and equipment to do the job is possible, it's expensive. It requires many computers connected to each other, in fact, in what is known as a computer farm.
It's actually going to be a very important tool for me, because it's going to, and I'm sure it's going to be affordable, and it's African, so it has put into place the African perspective, so it will be easy for me to use it for my work and for my research.
We have essentially been consumers the whole time, and now we're actually the ones driving it and leading it. And it's nice to get ourselves on the map with all these big institutions like CERN or the SKA, and it's great. It's fantastic.
The South African designed and developed high-throughput computer is still in the R&D phase, but according to Professor Molado, a cheap laptop version will be available for South African schools before the end of the year. I'm Angelo Coppola for CCTV.
Kenya Central Bank officially launched a revised method of calculating retail interest rates on the 8th of July. The Monetary Policy Committee set the Kenya Bank reference rate, as it's known, at 9.13%. That's basically arrived at by taking the average of the sum of the central bank rate on one hand and a weighted 2-month moving average of the 91-day Treasury bill. KBRR aims to standardize the way lending rates are set across the market, but Kenyan banks have the leeway to add a premium on top of that based on their own cost structure and a borrower's credit profile. In its July 8th meeting, Kenya's Monetary Policy Committee also held the central bank rate at 8.5%. Now, if you have been keeping tabs on that particular debate around the Kenya bank reference rate, you will realize it's kicked up quite a firestorm among bankers in Kenya. We have one of them in studio with me. Johnson Derry is in charge of corporate advisory services at ABC Capital. You've been extremely cynical about KBRR today. Why?
Well, I'm generally cynical about any and all price controls. Because and it goes to the question, why do you have markets? Mm-hmm. And markets are there to help regulate consumption and production of produce, because you've got suppliers of in this case savings on one side, and suppliers of and demanders of funding mm-hmm. on the other side, and price controls will create mismatches in the country, mm-hmm. and that's primarily my concern.
But wouldn't it be fair to argue, and I know I'm veering off into efficient market hypothesis here, but wouldn't it be fair to argue that to some extent markets here have failed? The interbank lending market, for example, is more or less skewed. We see liquidity mismatches, mispricing of liquidity, and so on. And
it's not necessarily skewed. It's actually the market making use of the finances that are available. And therefore, when for whatever reason, financing is lacking on one side, that's why you have the interbank market to supply funding to cover up for the mismatches around. So that's actually a market generated to a great extent, a market generated activity designed to stabilize the system.
Would it be fair to argue that given the way KBRI is structured, it essentially provides a perverse incentive for banks to bid up Treasury bill rates in order to ensure that they can kick up their margins?
Not necessarily, because again, the T-bill rate, and I don't consider the T-bill rate a market rate, mm-hmm. Simply because you've got mandated buyers because insurance companies and banks are required by law in a lot of cases to take on securities, government securities, and even the incentive built into the risk analysis system favors government paper over everything else. And therefore it creates, in my opinion, false demand. And that's not a good measure.
But aren't we seeing a situation now? I mean, if you look at T-bill rates since January, for example, we started at about 8.4, 8.3%, now it's 11.4, and all of that ramp up started in the run-up to the budget. And now here we are with KBRR. Some would say, look, I mean, you guys are essentially telling us, yeah, we're going to squeeze you because we know the pricing mechanism will change.
It's a huge market, but you're right. There, for survival purposes, it could be the case. But if you think about it, the banks are also exposed because take a scenario where inflation just shoots up, like we did in 2010-11.
Yeah.
Because the interest rate is anchored by the CBR, which is really a bureaucratic, it's a fiat rate. And then you've got a moving average. Then banks will be behind the curve in terms of protecting themselves from such issues, and therefore banks will be exposed. So I look at it from that angle, and it doesn't make one sit comfortable.
Indeed. Finally, Johnson, KBRR, at the end of the day, it's being set on a 6-month window. It's essentially a lagging indicator at the end of the day. Will this change the way banks manage that asset liability mismatch? Are we going to see a lot more cash holding, more conservative ALM strategies, or are we going to see a situation where the larger banks, the top 5, top 6 players with plenty of liquidity in their balance sheets will now be having a bit more leeway to be more aggressive with the ALM management?
Actually, you're right. The bigger banks, because by virtue of the nature of their liabilities, will probably be able to take this much easier. It's the smaller banks that will be a little bit more exposed. The nature, from the press release that was released by the Professor Juguna Ndongo, it says that they want it's more or less like a directive, a soft directive, but a directive nevertheless. That the premium added should be as close as possible to KBRR. We don't know what that means. You can be sure there'll be rules and regulations that push you to that, and that exposes banks, because then that ignores pretty much the risks that these banks faces, and obviously the cost of capital is ignored across the board, because then the KBRR does not take into account cost of capital.
Indeed. Unfortunately, we'll have to leave it there, but the conversation will continue online. Thank you for your time this afternoon, rather this evening, depending which part of the world you're in. That, of course, is Johnson Derry, Corporate Advisory Services, ABC Capital, and Derry_J on Twitter. The conversation will continue over there. Thank you so much for your time. Let's move on to commodities right now and see what's going on in the markets over there. Crude oil prices 108.63 on some of the contracts that we were keeping track of here on Global Business Africa. Across the board, gold, bit of positivity and buoyancy coming over there. Same thing with coffee. When we come back, we'll be in Ghana. We'll introduce you to a team that's turning ordinary trash into something a lot of people want to buy. Details coming up next. Welcome back to the program. Let's move on to a quick run through what some newspapers are carrying right across the continent, starting in Kenya. The Business Daily has a report on a visit by IMF officials who are here for Article 4 consultations with the IMF. The IMF, of course, did meet the Kenyan President, Uhuru Muigai Kenyatta, and it quotes the President as saying that his government is committed to working with the IMF and other international financial institutions to uplift living standards. Over in West Africa, Nigeria's Vanguard says a decision by the World Bank to launch a strategy aimed at helping the federal and state governments as well to reduce poverty will be a positive development for Nigeria. After a rebasing exercise was concluded, of course, to much acclaim in April, the country partnership strategy is projected to help the oil-producing nation redouble its efforts to tackle critical development challenges. And finally, in South Africa, the Business Day is warning that the country faces a critical skills shortage in construction and building. According to a survey carried out, there is a significant shortage of supervisory skills in building sites, and that in turn, the paper argues, threatens the safety of individuals working there and the tenants of those buildings as well. The report says that the skills gap may just be the reason why there have been cases of buildings collapsing in South Africa. Now, a unique recycled product is proving to be quite the hit with consumers in Ghana. Trashy bags, as they are known, are causing ripples internationally as well, not just because of their appeal, but also due to their source material. Katerina Vitozzi starts our series on African brands in Grassroots tonight.
From waste to bags in good taste. Trashy Bags is Ghana's best-known upcycling company. It turns used plastic water sachets and advertising posters into a range of utility and luxury bags. Their unique selling point, producing recycled goods that aren't a load of rubbish.
Branding is also about quality, and then I think for 6 years now, people who have been part of us and who know our products, you see that we are really very particular about quality control. So even though we're making products out of recycled material, we're still very particular about that.
Trashy Bags products are sold both locally at their 2 stores in the capital Accra and worldwide through resellers. Sly Achiampong is the company's chief designer. His job is to find a balance between products that have a distinct African flavour and an international appeal.
They are our most popular bag in Trashy Bags, so I think it looks like African bag. We use African fabric, so that's the main thing I think people like most. Yeah.
Trashy Bags products range from this 2 CD reusable utility bag, which is about 70 US cents, up to this tote, which retails locally for 99 CDs, which is about 35 US dollars. Key to the brand's success is understanding who is buying each of these products and listening to their feedback.
We have a variety of customer experience that we have people locally here who are fascinated by the fact that they see waste that otherwise would be on the streets being recycled into making very useful products.
Trashy Bags produces 23 different types of bag. Each is handmade. 58 permanent staff keep up with demand at this factory in Accra.
I'm proud because of everything is from Ghana, so it's Ghana made. The fabric, the board, everything is from Ghana, so I'm proud of it.
Trashy Bags has won awards for being a sustainable fashion brand, one that's a hit both at home and abroad. Katerina Vitozzi, CCTV, Accra, Ghana.
As far as currencies are concerned, not much to talk about with respect to most of the currencies that we track here. The Ghanaian cedi is still relatively weak, well, quite weak against American dollar. The rand, the Kenyan shilling, however, and the naira relatively flat in trading today. And that's it for this edition of Global Business. Send us your feedback on Global Business Africa at cctv.com. Social media is our friend as well. We're all over the place, Twitter, Facebook, wherever it is you want to join and touch base with us, do so as soon as you can. That's it for this edition of the program. Thank you for watching. I'm Ramanyang in the Kenyan capital, Nairobi.